What's going on, guys? How are you? How are you doing? This is Shocks, and this is ShocksCapital YouTube channel. Today, I want to show you a strategy that is based on market structure, and this is the only strategy you need if you are someone who enjoys trading market structure. So what I'm going to show you today is the correct way to read market structure. Then after I show you the correct way to read market structure, I'm going to show you the correct way of looking at points of interest on that same market structure, and I'll show you how to actually place your entries without moving time frames. So this is something that you want to do, and this is something that we are going to do together. Buckle up and enjoy the ride. So what we are going to be doing is very simple. We're looking at market structure. A lot of you have been taught market structure, they've been shown this schematic where they are telling you that this is a high, this is a high, this is a high. Not that I'm saying this is wrong. This is very correct. And they also show you this type of market structure, and they tell you that this is a what? This is a downtrend and this is an uptrend. And to top it off, they also show you a consolidating market like this. And the problem starts when you go to your charts and you see something like this and you are not able to put that into that. So what you are going to be doing is very simple. We are going to be looking at a realistic market structure, and I'm going to show you how to actually read market structure and profit off of it. So what I'm going to do, simple, right? Market structure is like this, but the real market structure combines all these three, right? These are just skeletons. So what we just have to do is to combine the three and look at market structure the right way. So what are we going to be doing? I'm going to show you that when we are in an uptrend, right, price is going up aggressively on the up runs, right? On the bullish runs, it's going aggressively, but on those ones that are retracing, those bearish ones, it's actually giving us a structure that looks like this one that we have just packed on the side, right? So what we are going to do is very simple. What we are going to do is very simple right here. We are going to be looking at structure from a perspective of someone who actually wants to understand and trade it on the real charts. So price goes up, you have to understand that price will do this in the what? In the retracement, then goes down and goes up again. Then in the retracement, it will give you something that looks like this. So that, and sometimes it actually gives you something that looks like this, and all of a sudden you are confused, right? So what we want to do here is very simple. We want to avoid the confusion. And how do you read market structure so that you are not confused? I want you to focus on two points, right? So when market structure is being studied, right, what you have to focus is on the impulses. After focusing on the impulse, you have to understand that you are just focusing on the high and the what? And the low. After focusing on the high and the low, anything that is going to happen inside here, it will not matter. So it can be anything like this, it can be anything like this, as long as we haven't taken out any of these highs and lows. Then this one that is happening here does not matter, and this one has to be treated as consolidation or a retracement. So once price breaks out, that is when we are trying to look forward, to look for another wing that look like this, and we are after as soon as price breaks out, we are starting to look for a what? For a retracement back in the what? Back in the range. And in that range, we are going to be waiting for maybe some interest or some parameters that will be close to the what? Close to this low like this, and we'll be looking for price to get to this what? To this particular zone, and then we can trade going up. So when you are looking at market structure, your focus should be on the low and the high. Once you understand what is happening with the low and the high, whatever is happening with anything else does not matter to you. What you just need to do is to understand the high and the low. What is happening inside is, with that out of the way, let's just look at this. This is the what? This is the DXY, the US dollar index, and this shows how the US dollar is moving. So if you understand the US dollar index, you understand all the USD derivative pairs. You are talking about Euro USD, you are talking about the AUDUSD, you are talking about the USDCHF, the USDJPY, all those ones, they move according to what this index does. So from what you are seeing here, number one, I said you mark the high, right? And you mark the what? You mark the low. That is how you read market structure like a pro, right? You mark the low, you mark the high. Whatever is happening before we break any of this is nonsense, right? So we are going to be looking for a breaking point, which is this one. When we look for a breaking point, we are looking for price to what? To get back to the low of the range. And when price breaks, remember, it forms another new range with its own high and its own what? Its own low. So you want to see price dancing in this what, in this range until it gets close to the low. Then you find your ways of what, of getting it as a trade. And remember, I'm going to show you how to actually do that. So when price is going up, then all of a sudden price breaks a what, a low at this particular zone. When it breaks a low, we were considering this low and this, let's say this low, this high and this low, right? Breaks a low, right? And it leaves behind a what, a low, a high, sorry, leaves behind a high, because now we are in a what, we are in a downtrend, leaves behind a high. And look at what it does. So what, once you understand the highs and the lows, you have cracked what, you have cracked market structure. So from what you are doing here, and you might be asking yourself, so how do you actually get in a trade and what, and actually make money using what I'm saying here? So it's very simple. Once you understand a high and a low, what you need to do is, if you are in a downtrend, right, you go to the high and you look for the last opposite candle before that down move, which means you are looking for a last bullish candle. And that last bullish candle becomes your what, your point of interest, your supply zone, or your order block, depending on what you want to call them, right? And if you don't understand this, you can actually mark the whole high, right, as your what, as your point of interest. Let's say, for example, this is the what, this is the high. What you need to do is you just mark everything that you see in that high as your what, as your supply zone. You make it as a zone like that, and you wait for price to come back and retest like what is happening in this what, in this area. And what is going to limit your exposure to the market in terms of the stop loss is what is going to be happening on the what, on the M15 and other lower time frames. So price goes away, breaks a low right here, and what are you going to do? You are marking that particular high as your what, as your supply zone. And look at what price did. Then price goes away again at this particular zone. What are you doing? You are marking that as your supply zone, and you are waiting for price to actually come back and you sell off that zone, right? When price goes up, breaks a high, and what are you going to do? You are marking that low, and you are going to be what, to be doing this. You are waiting for price to do this as price goes up, because this is how market structure is going, and this is how you are reading market structure like a pro. Let me just show you something on AUDUSD so that you guys can actually get a hang of what we are actually doing here. So this is the AUDUSD, the Australian dollar versus the US dollar. So from what you are seeing here, you can see that we have a market structure that is not very clear, but because of what we have discussed, we can actually crack this market structure and actually trade it. We have this low and we have this high. This is the range that we have. Remember, after we have identified that we are in an uptrend, after you identify a low and a high, you then identify at that low the last opposite candle, and that becomes your demand zone. Look at what price did. It comes back and goes away, and you are going to be doing that for the rest of it. But here I wanted to show you what we are doing at this particular zone, right? Here we had this high and we had this low. So this is how you actually predict what is going to happen in the market, or that's actually how you mark your orders, or you project what is going to be happening in this market. You have a low, you have a high. Then after that, what are you going to do? This is a new high, right? A new lower high after this, which means we are waiting for a low at this particular zone. If that low is locked in, then we have a range. Then after that, remember what we are doing. We are marking a zone, or a supply zone, demand zone close to the high. So this is the zone that I've marked. So what is my projection? Break that and come back and give us something at that particular zone. So this is my marking, and this is what I will be trading in the what, in this coming week, or in this week, depending on when you are seeing this video. So this is what is actually happening at this particular on this particular chart, right? With that same thinking in mind, let's go to GBPUSD. Let's go to GBPUSD and try to see what is happening on the pound sterling. And on the pound sterling, we have more of the same, right? Either this is going to break this and we go back to this particular order block and go away like this, or we are going to retest this and price is just going to go straight to this order block, because this is a high, this is a low, remember, and this is a high. We are waiting for a low, and remember what we are doing with our markings, right? So that is how we are going to be looking at it. So we are just going to be seeing what is going to happen when the market opens, because at the time of the recording it is during the weekend and the market is not moving, so there's no way I'm going to know what is going to happen. But remember, those two scenarios I gave you, that is what you are going to be looking for. And if it happens, you know what to do and you know how to strike. So for the last example, let me just show you what is happening on this pair, and this is USDCHF, and let's just see what is happening on USDCHF. And on USDCHF, as you can see, we are in a very beautiful downtrend, and I don't know why, because because the AUDUSD, or all of them are saying downtrend, and this one should be opposite. But because the dollar index is in a downtrend, this should be in a downtrend, or we are going to see what is going to happen. So look at this. We have price moving down, right? We have price moving down, and we have a what? We have a high and we have a low, right? So remember, you don't touch anything as long as one of these is broken. But because we are in a downtrend here, we can trade off this, and we are looking at this to what? To reverse price and start a what? An uptrend, to actually be in sync with other pairs that we were actually seeing. So this is what I'm projecting on what? On the USDCHF. So when the market opens, we are going to see how this is actually going to pan out, and this is what I'm looking for. So when the market opens, it will be very clear what is going to happen on this pair. But for now, I am going to sell this one off this particular zone. So this is what I wanted to show you guys on market structure. Market structure is very simple. Just look at those 2 points, right? After looking at those 2 points, you know what to do. And remember, if you want to trade with me, you join the Telegram channel. The links are in the description down below. And if you guys want to trade with a very reliable pro firm that guarantees you payouts and that pays you 15% of whatever you make in the challenge phase, look no further than Funded Next. The links to Funded Next are in the description down below. What you just have to do is click the link, get your challenge, and let me help you get funded and escape the rat race. I will see you in the next video. My name is